Hi friends, if you want to build a retirement corpus of 10 crores, there are a lot of good retirement options. For example, you can invest in mutual funds, you can invest in stocks, and there are also specific retirement plans. But one of the most underrated retirement options in my view is NPS. This is because NPS can save you more than 1 crore rupees just in the capital gain taxes. Let me show you the workings. So let's assume that your current age is 30 years and you want to get retirement at 60 years of age, meaning your investment horizon is 30 years. So let's consider that as the investment horizon here. And let's say option number one is that you consider NPS, and then second options could be, as I said, many other options, right? Now let's say your target amount is 10 crore rupees. You want to build a retirement corpus of 10 crore rupees. Assuming that your investment can yield 12% CAGR return in both the options, NPS or any other retirement plan. I'm comparing like for like here because I want to show you the impact of capital gain tax alone. So let's assume that your investments can grow by 12% CAGR, and for this you would need to do monthly SIP or monthly investments of around 28,329 rupees. Now yearly, that means 3,39,000 rupees is what you would need to invest. Your total investment amount over the 30 years would come out to be almost 1 crore 2 lakh rupees, give and take. Now in this example, your capital gain or the profits will come out to be around 8 crore 98 lakh rupees. Now the beauty of NPS is that in NPS, you don't need to pay any tax on this 8 crore 98 lakh rupees. Your long-term capital gain tax will be zero. While in most other retirement options, you will have to pay long-term capital gain depending on what is the slab at the time of your retirement. If you look at the current slab, it is 12.5% capital gain tax you will need to pay on this amount, which is 8 crore 98 lakh rupees. And if you do the calculation, your capital gain tax will come out to be 1 crore 12 lakhs 25,000 rupees. So more than 1 crore you will have to pay as capital gain tax if you were to withdraw all of this money at the age of 60. You may say that, Rahul, I'm not going to withdraw all this money in one go. That's okay. Even if you withdraw this every year, let's say 12 lakhs, 15 lakhs, only 1.25 lakh rupees will be exempt, but remaining money needs to be taxed at 12.5% as of the current rates. Now, as a result of this capital gain tax, you will end up losing almost 1 crore 12 lakh rupees. So your 10 crore corpus will not be 10 crore corpus. It will come out to be almost 8 crore 87 lakhs. So in case of other retirement options, this is one of the biggest drawbacks. But in case of the NPS, this is the biggest advantage, that your capital gain tax is zero. And that is why precisely I say that NPS is the smartest way of saving, investing and growing your wealth over a longer period of time. In addition to saving capital gain taxes, if you are in old regime, you can also save lakhs of rupees in income tax, because there are two advantages of NPS. Number one is that if you are in old regime, you can save up to 1,50,000 rupees of your income from income tax, meaning up to 1,50,000 rupees of your income will be income tax free under the section 80 CCD1. And second advantage is that your income up to 50,000 rupees is also going to be income tax free under the section 80 CCD 1B. All in all, income up to 2 lakh rupees can be income tax free under the old regime. For example, if you fall under 10% income tax slab, you can save 20,000 rupees per year. 20% income tax slab, you can save up to 40,000 rupees per year. 30% income tax slab, you can save up to 60,000 rupees per year. And more importantly, if you put this savings to work, meaning if you invest this saving at 12% returns over a 30-year time horizon, this saving can give you lakhs of rupees in terms of savings. For example, 20,000 rupees per year over 30 years at 12% will give you 54 lakh rupees. This 40,000 rupees at 12% over 30 years will give you 1 crore 8 lakh rupees. And this 60,000 rupees at 12% over 30 years will give you almost 1 crore 62 lakh rupees of savings. So not only you can save in capital gain taxes, you can also save in income taxes if you are in the old regime. And that's why NPS is the smartest way of saving, investing and growing your money over a longer period of time. Now you may have a lot of questions on NPS. Let me try to break down all of these questions in a very simple language. The first question you may have is, Rahul, how do we go about opening an NPS account? So you can open your NPS account completely online using Protean. Protean is the largest and most trusted central record keeping agency appointed by PFRDA, Pension Fund Regulatory and Development Authority India. I've given you the link of Protean in the description or in the pinned comments. When you click on that link, you will be directed to this website of Protean. If you don't yet have an account, simply click on register now. The process is extremely simple. You will first see these 4 options, whether you are individual subscriber, government subscriber, corporate subscriber, and NRI and OCI. You can just select whatever applies to you and then go through the process. The first thing will be that you start to fill out your personal details, for example, date of birth, etc. And after that, you will need to go through some authentication process, which is very normal, Aadhaar authentication process. After that, you will start to fill out more detailed personal information about yourself. And then you will come to the investment options. For example, whether you want to go with the auto choice, active choice. I'll try to clarify all of these. Allow me some time. In this video itself, I'll nail down all of these details for you. But now completing the process, you will also have to enter your bank account details. You can add your nominees, etc. And finally, you can start to make your NPS contributions all online, either in tier 1 or tier 1 plus tier 2. And you can make the payments using UPI. Opening the NPS account is extremely simple with Protean. Protean is the first and foremost central record keeping agency appointed by PFRDA since 2008. As the oldest CRA, Protean holds almost 97% market share in NPS and APY subscribers. And this makes Protean not just the oldest, but also the largest and most trusted CRA in India. The second question you may have is on returns. So Rahul, you showed us 12% CAGR returns in the beginning of this video. How likely is 12% of returns in NPS? So if you look at the last 5 years of data, and if I show you the NPS returns in the last 5 years, you will see that majority of NPS funds have delivered around 15% to 16% returns yearly basis. And if you compare that with Nifty 50, in last 5 years, Nifty 50 has managed to generate around 15% returns. So NPS has generated slightly better returns than Nifty 50 in the last 5 years. If you go back to, let's say, 15-20 years of data, so if I show you since inception data, let's say, for example, ICICI and Kotak NPS fund, they have started from 2009. And if you see the returns here is almost more than 12%, 12.7%, 12.2%. If you look at Nifty 50 since inception, almost 25 years of data, you will see Nifty 50 has managed to give around 11.3% return. So overall, if you see, even in the last 15 years, NPS funds have managed to generate around 12% return. So history tells us that NPS in the past 15 years have generated around 12% of returns. Of course, these are not guaranteed returns for future, but past does tell us some indications about the returns. The last point on returns is that your NPS returns will highly depend on the type of scheme that you choose. There are various NPS schemes that I will speak about subsequently. The returns that I have shown you on my screen are for scheme E, which is equity. The third important point is the lock-in period in NPS. A lot of people have this myth that NPS means that your money is locked forever. Well, that's not true. Let me make 2 points about it. Point number 1 is that you can withdraw up to 25% of your NPS contributions after 3 years. So for example, if you start making contributions today in 2025, in 2028, you can withdraw up to 25% of your NPS contributions. And you can use this money, for example, for your child's education, for wedding, for constructing your house or your flat, whatever is the case. So up to 25% of your NPS contribution is allowed to be withdrawn after 3 years. The second point I'll make about these withdrawals is that a lot of people say that, Rahul, why can't we withdraw more than 25%? We get that flexibility in mutual funds. We get that flexibility in stocks and many other instruments. My point is very simple. It is your retirement money. It is supposed to be withdrawn at the time of your retirement. The whole idea of NPS is that it does not allow you to withdraw the money because it is allowing you to save for your retirement. It is allowing your money to get compounded over a longer period of time. If you get that flexibility of withdrawing the money, what are you likely to do whenever there is an emergency? You will go and just withdraw the money recklessly. And this reckless decision making is what NPS is trying to stop it for you, because ultimately it is looking out for your retirement planning, which must ensure that your money is locked in. And of course, you might need some flexibility. That is why it gives you that 25% of your contributions to be withdrawn after 3 years. In my view, that's a very good balanced approach. Moving on to question number 4 that you might have is that, Rahul, in NPS, we have heard that there are 2 types of account, tier 1 account and tier 2 account. Why do we have 2 accounts and what are the differences in these 2 accounts? So let me give you 30 seconds commentary on these 2 accounts. So tier 1 account is your main NPS account. That is a mandatory account if you want to start in NPS, while tier 2 is an optional account. If you want to open it, otherwise don't open it. Please note that tier 1 account is the must have if you want to invest in NPS. Now what are the differences? For example, tier 1 account is eligible for your capital gain tax benefits that I spoke about in the beginning of the video, while tier 2 account is not eligible for any capital gain tax benefits. Point number 2, we talked about the income tax benefits if you are in old regime. So the money that you invest in tier 1 account is eligible for income tax benefits in the old regime, while the money you invest in tier 2 account is not eligible for income tax benefit. Difference number 3 is withdrawal rules. So for example, the 25% limit gets applied to your money that you're putting in tier 1 account, but in tier 2 account, whatever money you are putting, there are no limits. You can withdraw it anytime you want. Again, this is an optional account. Key difference number 4 is in tier 1, you can invest up to maximum 75% of your money in equities, while in tier 2, there is no such limit. You can freely invest up to 100% of your money in the equity schemes that I'll speak about in a minute. So as you can see by these 4 differences, tier 1 is your main account that drives all the benefits of NPS. Tier 2 is just a supplementary account. It's an optional account. If you want to use it. Otherwise, you don't need to use it. Moving on to point number 5, which is, Rahul, where does my money get invested if I put my money in NPS? So broadly, there are 4 asset classes. Number 1 is asset class E, that is equity or stock related investments. Number 2 is C, that means corporate debt related investments. And number 3 is G, which is government debt related instruments. And number 4 is A, which is the alternative investments. Now there are 2 rules that you need to know, that you can put maximum up to 75% of your money in equity. More than 75% is not allowed because equities or stocks are highly risky investment class. Second rule is that in the alternate investment funds, you can only put maximum 5% because these are also very, very risky investments. But in corporate bonds and in government security, you can put up to 100% of your money. Now comes the next important selection point for you as a NPS subscriber. That is that whether you want to go to the active NPS route or auto NPS route. Allow me 1 minute of time. I'll explain to you in the simple language. When we say active, that means that you actively want to manage your money in the NPS account. Meaning that you may say that, Rahul, I want to put 75% of my money in equity, 10% of my money in corporate bonds, and the remaining 15% I want to go with the government security. You are absolutely free to decide this allocation if you want to go with the active choice. In the active route, you might say that I want to go 100% with the corporate bonds. You might say 100% I want to go with government security. You might say that I want to go 75% in equities and 25% in corporate bonds. So choice is yours, but the only limitation is that you cannot go more than 75% in equities and not more than 5% in the alternative investment. And also there is an age restriction that up to 50 years, you are allowed to do 75% in equity, but after 50, even though you may want to do 75% in equity, that is not allowed. After 50, your equity allocation will start to drop because NPS is telling you that after 50, you do not want to take very high risk by investing your money in equities because you are getting very close to your retirement age. Therefore, you need to safeguard against the stock risks. That's why I say NPS framework has done a lot of thinking for you and you don't need to think a lot. Then comes the second choice, which is the auto allocation, where you say, Rahul, I don't want to decide all these allocations. It's very confusing for me. Is there a simpler way? Yes. Auto choice is a simpler way, more simpler way than the active way, because in auto, all you need to do is decide your risk appetite. 3 risk appetites are there. Number 1 is aggressive life cycle. Number 2 is moderate life cycle. And number 3 is conservative life cycle. You can say that, Rahul, I'm an aggressive investor. I want to take more risks. So in that case, what happens is up to 35 years of your age, your allocation will be something like this. 75% goes in equity, 10% in corporate bonds, 15% in government security. And as you can see on my screen, as your age goes up, your allocations start to change automatically. But because you're an aggressive life cycle chooser, up to 75% of your money is getting invested in equities. up to 35 years of age. But let's say that you're not an aggressive type of investor, you want to take a moderate life cycle sort of a risk, then in that case, up to 35 years of age, 50% of your money gets into equity, 30% in corporate bonds, and 20% in the government securities. And as you get older from 35 years of age, let's say 36 years, your allocation will start to change, equity will start to drop. And if you want to go really conservative, which is the least riskier option, in that case, up to 35 years of your age, your 25% of money is going to get into equity, that is maximum, 45% in corporate bonds, 30% in government securities. And after 35 years of age, your equity allocation will start to drop down because you don't want to take undue risk because you're a conservative investor. So NPS allows you lot of flexibility, allows you lot of selection depending on your risk appetite, depending on how you want your money to get invested. Sixth and the last point that you need to understand about NPS is that there are total 11 NPS funds at the time of recording this video. For example, you can see the list here: Aditya Birla, Axis, HDFC, ICICI Pru, all well-reputed funds are there. You can decide to go with any of these NPS pension funds depending on the AUM, subscribers, the past returns. So for example, here you see the equity returns in the past 1 year, 3 year, 5 year, 7 year, 10 years period. And in my view, if I look at the long-term returns, you will see that last 10 years return, for example, UTI has given the maximum last 10 years returns, 12.20% at the time of recording this video, followed by HDFC that has given 12.13% returns. Again, it is entirely your choice which NPS fund you want to go ahead with. You can choose different NPS funds for your different asset classes as well. I'll try to give you the link of these 11 funds and their returns across the asset classes so that you can download it at the time of recording this video, or you can download it from the NPS website as well. And you can make these choices while you're opening your NPS account. As I've given you the link of opening the account with Protean, you can go into the link, and during the online registration process, you can select your NPS choices in terms of which funds, auto choice, active choice, etc. So in this video, I've covered a lot of details about NPS. If you still have questions, let me know in the comments. Also, if you like this video, hit the like button. Let me know in the comments a simple thank you. It motivates me to come up with such content for you at zero cost. With that, I'll see you in my next video. Until then, keep rocking.